Thank you very much for joining us. Ivan Cherrylove is going to be hosting this session. My name is Patrick Nelson. I'm from Reach Markets. Ivan represents Trade Floor, but together we come together on implied volatility and Reach Trading. And
only the best trading platform in the world.
The best. And tonight is a cap on the game. Thank you to everyone that's come, and we can see a lot of familiar names. So everyone who's followed the game and attended all the different sessions and played actively, well done. And tonight we're here to talk about who won the game, who I actually don't know who the winner was.
Well, you will find out shortly.
Right.
Isn't it amazing? The first thing, we'll start off by saying Trade Floor, for those of you who don't actually know what we are, I'll give you a quick introduction on that. And collectively what it is that Patrick and I have been working on for the past year and a half or so, and ultimately how your trading experiences in the game can translate into the real world. We're going to stay off impeachment talk. We're going to stay off Woolies talk or anything news. We are going to talk purely from an educational point of view. You get to find out some of the trading strategies people did. We are going to talk about our trading system as well. So, do you want to give you a 2-second general advice warning?
Yeah, any advice contained in the presentation is general only. It doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns.
It's not like you've ever said that before. It's so smooth, man. So we now had a couple of other people join us as well, which is great. All right, let's get going. So for those of you who do not know who Trade Floor is, we are a fintech/regtech company, and we're all about building powerful technology through some cutting-edge technology that has been developed, I guess, globally. What we are doing with options today is sort of one of those things that, you've been in the options market for a decade.
Mm-hmm. Yep.
And, or more than a decade. And, the first time we collaborated together would have been 4 years ago.
That's right.
And that was the first time that someone delivered an options margin calculator to the market at scale.
Absolutely. Sort of 17 years ago, my business partner at the time had an options calculator he used to run from his computer in an Excel spreadsheet. We took that and turned that into an options calculator, and I think about $500,000 later we shut it down. But it was on the ASX's website as an options calculator for a period of time there. But, we just never saw anyone invest in any real talent and or money into building any technology for options trading in the Australian market. It just hasn't existed for a very long period of time until Trade Floor came along.
And $5 million later, here we are. You say that as a joke. Well, I say that as a joke. It's actually not. There is legitimately a lot of money that went into building this. We've got a heap of clients. We are the risk management system that 60% of the retail market uses. And you're kind of waving your arms going, with our logo, hang on a second, we'll get to it. These are sort of my clients, and then there's of course my best client.
The tier 2 clients.
Tier 2 clients. But names that if you're in that market, you probably would have come across and seen. So Trade Floor does the risk management for 60% of the retail market. There's a big client coming on soon, which will take us to 70%. So effectively everybody who does retail derivatives uses us for a day-to-day critical risk management system. So we came together about a year ago, and so Patrick's Reach Markets and myself at Trade Floor, and we've really gone hard around September last year.
Yep.
This year? Last year?
Yep.
So yeah, it was anyway a year. And we put together what's called implied volatility, which is a trading platform which is exactly like the options game, but we wanted to go on and bring that to the market as a real life experience. So implied volatility is the name of that platform because the nature of that was actually from a webcast that was generated back in the day when I was still living in Sydney, and we were doing a webcast, and someone said, implied volatility, like there used to be a really cool website that used to deliver all this data, and we're like, well, we do that, and and it's available, so let's go on and register it. So we're sort of how implied volatility. But the reality is one of the things that I've observed over the market is people trade options in the market without any understanding that they're actually trading implied volatility.
Yeah.
And although it's not the way that the platforms have been designed, all those complexities have been taken away so that you get the pure results and you can easily filter and understand what you're doing. But implied volatility is ultimately an extremely important thing. And I did put a backdrop of Melbourne there that I did find on the internet, and because we're based in Melbourne.
That's correct.
All of our support, all of our sales, every single salesperson is based in Melbourne.
For now.
All of our technology, what do you mean for now?
Well,
oh, no, that's right. Yes, we are opening up a Sydney office, and all of our technology is built in Brisbane.
Yeah.
So, yes, we do have
the East Coast.
We do have some exciting news that we'll go on and deliver.
The idea behind implied volatility, and we sort of pair it up, reach trading is that part of it, is that it wasn't to just give someone here some technology. It was the whole experience behind what makes someone successful as a trader. So on one side, you need really good technology that will assist you to be able to use information effectively. I mean, we're in the information age and we've got the ability to do all of those things, but you also need training, you need support, you need people to go and crunch numbers for you, to give you information that you can use in your trading. And every now and then you might be in a trade and you need to pick up the phone and speak to someone who's a very experienced trader and get them to help you through how to navigate the position that you're in, or be a sounding board. Technology by itself is not the solution. It's a combination of things all coming together in the way that you need it. But technology is the backbone of all of it at the same time. Yeah.
And, you know, I guess most of you have heard of my story as a trader. You haven't been so public. I only actually made, so when I recorded those 10 by 10 videos, most of you would have seen by now, and if you haven't, let us know. We can send those to you. But, you know, for me, it's the first time that I've probably publicly spoken about my trading background, purely because it just drew on a very important point. And, you know, just one thing that probably we'll just say, you know, when we're talking about this stuff, the reality is the reason why we spent, you know, 5 or 10 minutes talking about this stuff is just because Patrick and I came together it's probably been about 2 or 3 years ago, and we're on the ASX courses on the roadshow, and it's something that it's not a major business for both of us, to be completely frank, in terms of revenue. But it is something that both of us are extremely passionate about. We've been doing all these countless things about trying to educate people, and the other thing about implied volatility was always just that ability to go on and create education at scale. You had a $4,995 course that you know, we decided to go and just record and put it up as part of that education portal for free for everyone to use. It's in the game, and it's in the implied volatility platform, and there's more stuff that we're putting out to do that. And I think that, you know, as far as what we've seen, we had some funny emails the last couple of weeks actually just coming through. But the reality is that if anybody is looking to do options, or they want to have that conversation with someone, and it doesn't cost anything to talk to people with us, and we just want to go on and facilitate that kind of that resurrection of our options market, because it's such a good trading instrument.
I think the challenges that traders have got is getting access to good technology that helps you make better decisions, being able to trade in a way where you're not paying all of your brokerage away to your stockbroker, being able to get advice when you need advice, so being able to do a iron condor or four-legged trade online at the cheapest rates possible is really, really important to you. But sometimes having a conversation with someone that can actually advise you on that is equally important to you as well. So I think for us, the holistic sort of service was always about, well, how do we create the experience that means that if you're an options trader, you can get it all in one spot. Yeah, definitely.
Anyway, enough of us talking a little bit about that. You know, for those of you who haven't played the last game, I guess the synopsis of what we're trying to say is that traditional stockbroking, what people think about it is that is sort of the image. It's, you know, crazy sales tactics and just pushing down shit.
Stockbroking Brokers usually aren't that good looking either, but that's
That is
the only
that
difference.
is true. That's just because they've aged a lot since that movie came out, and haven't had money for plastic surgery like some people. But having said that, there's sort of been this disconnection between what technology's allowed people, and ultimately the thing that it gets to is that one of the things behind sort of trade floor and what we've been doing together collectively with Reach is this trillion-fold increase in performance between 1956 and 2015 alone. I mean, that's a lot. I mean, that's like almost the size of US debt growing kind of rate. But it's important when we're thinking about what's possible with technology today. We couldn't even do a year ago in terms of what we're achieving. And, and you look at sort of those big events in 1985, the first real supercomputer, well, the first supercomputer was probably Cray, but Cray 2 was the first coined supercomputer. It was built in 1985, 2.5 tons it weighed, and in today's money, it literally sits in a museum. 2.5 tons, so it's like 2.5 one-ton trucks, but to put that into perspective. But anyway, I thought I'd break it down for you. It does no 2.5. But anyway, and in today's money, it costs $30 million. And, you just got yourself a brand new iPhone today, but even the iPhone XS, which I know sits in our car as a cracked up little thing, but it's 6 times more powerful than the Cray 2 computer, and you're carrying it in your corner. So in actual fact, in simultaneous kind of performance time, this is what 1 trillion fold increase means, is that you can land 240 million rockets on Apollo 11 type missions on the moon in like the same millisecond. And it's crazy how much technology has advanced, and stockbroking just hasn't adapted. But neither has funds management, and neither have really the entire wealth industry, which is why we're seeing all this fallout from everywhere. So what we're working on collectively and have been for now well over a year is being able to utilize that technology and actually try and create meaningful edge in the market, which learns from itself. And that ultimately goes into our quant ideas, which are driven by a machine learning engine. So some of the stuff, I don't know did we post a lot of ideas, by the way, or we didn't have anything this month, did we? It was just...
we had a couple, but it just the way the market rolled, there was not much breakout action. Yeah.
We did have some good trade in terms of what clients put on.
Yeah.
I think it was a Westpac or something. Anyway. But the idea is that, if the market's not doing anything, nothing pops up because, we're not guys sitting in ties saying that if you don't trade this month, we don't have anything to eat. Our incentive is we're trying to bring brokerage down and get more value to you as much as possible. And this will pop up ideas.
The idea also with the quant tested ideas is that a lot of people have a premise for trading or a hypothesis for trading, but they don't test. And what we were able to do through the use of technology and also by hiring quants, university, very, very intelligent university grads who we can sit down and have work through with the combining with technology, our hypotheses, and test it. And then from there go, well, what about what you're doing actually works? And is there stuff in there that doesn't? And how do we optimize that? And then how do we scan the market and publish things that come up that are tested to historically have given you a significant edge in the market? And so that the idea behind the ideas that we provide through our platform is that they've gone through that process. So we're not just saying, we feel like this works. We're saying, well, these are the stats. This is how accurate it is, and you can use that. And it's a big part of, I guess, the future of what we're doing as well.
If you speak to someone on a daily basis, go and ask them, what are your performance? Can you back it up? We're just about to do a major deal with a major university, which will give us access, and it's a combination of a major university out of New South Wales and the government, who recognise this as a major growth of financial research ultimately. And so once that's done, it'll be quite exciting to announce as well. That's pretty close, and that'll give us access to 4 to 5 PhD students every year working through more of this stuff. So effectively what we've done before with our quant team, we can now scale, test more hypotheses. You guys have some hypotheses, chuck them through. We can work through those as well. So it's in terms of where we're at, we'll be thinking, we're probably, we're definitely different to the entire industry in that sense, but we're hoping that we can deliver meaningful edge. So that's sort of that, all that stuff that I guess we talk about. So that aside, I think it's probably time to get into the results. I did have a slide from last year where our results. Honestly, I didn't run them this year for this game. I didn't run them for this game. We did for a year, but finished first in 2018 in June, second in December 2018, third in July 2019. All our trading system was just a scaled up version. This is out of all of the games we've run, out of all the participants. This time around we had some other exciting results. We're about to announce those. Tim's kind of smiling in his joy that of what he's achieved. But we'll talk about that in a second. So one of the interesting things behind doing this was finding that our trading systems, how do they compete when you leverage it to the same extent that other people do it, and how do they perform? And they clearly stand up well. But we're going to talk about how the winners won. And there is a disclaimer, which you just read before, but we are going to be talking about general terms. Most of it is educational. For those of you that are looking to continue your education or start trading, you will be trading through, assuming you want to continue using the same technology, through Rich Markets, which is Patrick's baby. Alrighty, leaderboard. And yeah, speaking to Tim, who finished first.
That's right.
Congratulations. We've had a very amazing, for us, I think, for me personally, it's been an amazing result, because we've had Tim from Reach, Blake from Reach. I've had a busy week. I'm sorry. Clearly, I didn't do any proofreading. From Reach finished third. Belinda from Trade Floor. Blake, by the way, I know you're online, so I do apologise to you. But and Belinda from Trade Floor finished fifth. So we've had an interesting result, and you guys participated from the first day, and you guys have had consistent returns. The results of this game have been significantly better than the previous, and despite the markets being different in the sense that they moved a lot last time. When I was looking at this, I think the first person was like 120% return on a highly leveraged trade. This time around, there's been a lot more consistent trading. There's been a lot more range trading, and I think that there's been a different array of trading. There's been a lot more different strategies employed, and this is the first game that we've had the 10 by 10 course running all the way through. And the really good thing about that is it's starting to show real change in the way that people think about open.
Just quickly though, unfortunately, Tim, I know we haven't mentioned this to you, but because you work with the Reach, you're not eligible for a prize. So that means the winner is Nick.
It is.
Congratulations,
Nick. The winner is Nick, and he wasn't too far behind. And also, Tim decided to stop working for 1 month and concentrate solely on a prize that he cannot collect. So it's good, and we're really excited to have Tim and Blake back in the business doing their work. Belinda managed to do both the work and come fifth.
She can multitask.
She can multitask, but that's a developer brain. We are going to look at strategies that Nick employed and Philip employed. Brendan employed very similar strategies to Nick, so I'm just going to bypass those. Extremely close results, extremely consistent results, and a fair bit of trading. So, winning player, Nick from New South Wales, came up as Fat Cat on our leaderboard. So you would have seen that on the weekly thingies that we've done. I do wonder if Nick is online. No, he is not. Hopefully he'll be watching a replay of this. I do want to know why he came up with Fat Cat. Anyway, he traded 10 positions overall. CYB long call was with the trade that he made lots of money on, and just reviewing the strategy itself. So a long call is that sort of the basic quintessential strategy that you go to if you expect that the market is going to go up. So, and to your point, usually that you make during this conversations is you expect the market's going to go up and it's going to go up fast. Is generally the concept behind that. You want volatility to go up, but in reality, most of the time when the market goes up, volatility doesn't do anything. But the most important thing is just think it's going to run. And CYB really did. The risk reward of it is the maximum profit is unlimited. So theoretically, a stock can go from $1 to infinity and straight through the moon, but the maximum loss is limited to the premium paid. So it's effectively like an insurance policy, but a reverse in the sense that you make money if the market goes up. So CYB did have a big jump, and what he did is he bought 5,500 CYB October 19 calls on the 11th of October. At the money, he sold them on the 16th of October, and he made 153,000 on that trade. Now, it's a highly leveraged trade. It was approximately $25,000, $30,000 worth of value at the time, and the stock popped, and it was great timing. It's also one of those things where if it didn't pop, he'd lose that 30 grand, but it gives you an indication of what sort of that basic strategy can look like if you're investing and using options to take advantage of short-term movements in a market. So one of the ways that you made a lot of money, Tim, as far as I understand, is you looked at using calls and puts around times when markets were hitting support and resistance lines.
Exactly, yeah.
So that's sort of, you take a view, and if it's wrong, you shut it as quickly as possible and hope the time decay doesn't kick in. So really good strategy, held it all the way till expiry, which was the second last day of the game. And thus does do quite well. The second player, and it's actually the third player out of the eligible prize winners was Philip. Philip had he started later in the game, and he worked his way into a top position. I think he was second or third for a while before you pipped him at the end, and then I think towards the end he sort of dropped off. But the thing that was really good about Philip's positions was that he traded, as he went through the course, he was starting to engage with other trading strategies, not just bought calls and puts. So he wasn't in it to really win it. He was there to go in and learn the most out of the experience that it was. And some of the things that he came up with actually came from the trading scans, which was really good. So the trading scan screen is that screen that you get from the strategy builder, which is our trading system alerts that come up. And we're going to go in and talk a little bit about the Iron Condor system at the end. But effectively, the Iron Condor, we released part of that system to the game. The idea is for the next games, we're going to release a lot more of our trading systems that our premium subscribers get in the implied volatility platform, the quant research type stuff that we do. But that sort of came from this screen as an inspiration for a trade. And the Iron Condor is something that we trade a lot of, and so did Philip throughout his experience. And they're sort of, like for a professional trader, they're like they really are a go-to strategy. We trade a lot of them here. And part of our motivations and the reason why we went through our very long-winded explanation at the start was because for Patrick and I, one of the things that we couldn't do is we were almost incentivized by the market to trade risky positions. And we want to take advantage of a neutral strategy. You can't really do that if you're paying more than $100 a trade.
Yeah, the cost of a normal person doing an Iron Condor is minimum sort of $400 getting in, and that's $400 getting out, and it can be higher than that. Now, you need to be pulling a decent whack out of a trade before it makes sense to spend $800. If you can do it for an eighth of the cost, all of a sudden it opens up the door to be able to trade it in different ways. And Iron Condors, one of the challenges was people had trading banks maybe said that, I got $40,000 trading bank, but I'm doing like 10 grand of it in one Iron Condor because I need that kind of return to justify the cost of getting into the trade and possibly having to close out of it. Whereas if you can divide the, if the brokerage all of a sudden is only $100, then you can have 10 iron condors open if you want and have it spread across a
50 grand back.
Yeah, 50 bucks.
I mean, we've done the research. Actually, I'm going to talk about that towards the end because it's something that it's important to consider when you're looking at your risk reward and how much brokerage you're paying, because you can't say, hey, I made $1 million, but I paid $1 million in brokerage. Right? So you're obviously just wasting a lot of time. So brokerage becomes important if you're self-directed and you think about it. But anyway, iron condos are sort of the professional traders thing that we do, in particular around sideways markets. And it is really a low-risk income generation strategy. And the reason why it's a income generation strategy is because if you have, for example, a portfolio of stocks that you lodge as collateral in your portfolio, the premium that you receive ultimately goes towards your cash management account, and you actually have access to those funds to do stuff that you want to maybe buy things ahead of time, or whatever you happen to do. Iron corners are also pretty cool if you want to go and buy stock and just have a view that's going to be neutral to a little bit bearish. So there's a couple of things you can do with it, but broadly speaking, the reason why you trade iron condos is you expect that the market is going to stay between sort of the levels that you've taken, and you sell your put and call it around a certain point, and you say, well, I think that that's sort of where the market's going to stay, and then you sort of protect yourself. The big kicker to what you're doing is you're trading volatility, so you can look through things, even in the stock screener, you can sort by things like IV rank, and you can identify things that are trading sort of at that heightened sense of fear. And it all goes back to the Dow theory as really where I guess the basis of all of this is. And the Dow theory is developed by Charles Dow. He co-founded the Dow Jones Company. He was also the founder of Wall Street Journal, and he was the key editor of it, chief editor of it for a long period of time. And sort of after his passing, the marketing guys in Wall Street Journal actually created this thing that he was writing about all this time. And the idea is that, and we all know this is true, is that the highest point of conviction in the market sits at the highest point of greed, and in return, the lowest point of, or the highest point of fear, is really where people tend to give up on stock as well. So in reality, the mechanism of the stock market is that it just keeps going between greed and fear, and you end up just moving money around between people that are just being powered by human emotion as opposed to logic. And so the GFC, when everything was super low and you could buy Macquarie at like, oh, what do I put Macquarie at $19 or something? Sold it at 35, but I was never a good stock trader. This is why I tend to options.
Was that the skepticism phase?
It went very quick for me. No, but it was just I remember that when that was the market was stuffed.
Yeah.
And everyone's like, oh, it's going to zero.
Yeah.
And now the market is the complete opposite of that in so many levels, because like, well, it's trading at these super high levels, and it's continuing to go high. I mean, as a trader, it doesn't really matter as long as it's going somewhere. We actually want to start ranking high so that we can start getting some good opportunities again. And hopefully we're so wrong in that bullish move that we end up making a lot of money out of it, because that's really what our trading system was all about. But at the same time, for the majority of investors out there that are sitting there and like this massive inflow towards passive ETFs that people talk about, which is, I mean, it makes a lot of sense. But I happen to think that the timing's questionable when we're talking about all-time highs and the longest bull market ever on record.
Yeah.
So anyway, and by the way, I just, in terms of a warning for everyone, if I'm stopped making sense at some point in time, it is the 4 hours of sleep that I had last night. So just putting that into perspective. But anyway, so one of the ways that we track this index, or this concept, is we use volatility, or implied volatility, thus the name of the trading platform, to go and engage this value. So Volatility is high during periods of fear, when fear is at its highest. So during GFC, volatility was about 3 times higher than it is now. And volatility is very low during periods of greed. Like right now, we're coming off 3 or 4 years of historically super low volatility. And so when people freak out about what happened last year, for example, toward the same time about a year ago, when the market started collapsing for no real reason, literally there was nothing really there behind it to start collapsing, volatility started spiking, but it was still significantly low because we're still in this period of it doesn't matter. Buy the F dip is the motto pretty much everywhere online. And to give you a very basic example of what this means is that if you think about this in terms of what the market is that there are buyers and there are sellers in the market. And it means that out of the people that are online now, half of you might want to be a buyer of a particular stock and half of you want to be a seller. So what will happen is if we all want to transact the same amount, let's say CBA, what will happen is the stock price will not move anywhere. But if you have something that comes in, let's say a Royal Commission type of scenario where suddenly everyone's become bearish on CBA, then suddenly everything starts shifting into perspective. So all the buyers suddenly don't really want to buy, so they push off their, they pull their bids and they start saying, well, I don't want to buy at this level, I want to buy 5 or 10, 15% lower. And the sellers start saying, well, actually, I don't see the future anymore, I just want to sell my position as quickly as possible. What ultimately happens is these concepts of fear and greed and surrender, they all start playing with our minds and completely changing our perception of what it is that is true value for that particular stock. And if you look at sort of this is a one-year example of CBA that we pulled earlier, have a look at every single time that the stock trades in that over 20% volatility range. Every single time it led to higher opportunities. It was low in the market. So that was literally the Royal Commission. The market fell from, CBA fell from sort of 75 to 65. And there were a lot of people seriously caught. And I mean, just look at that sort of that first red candle up the top. Sorry, that red arrow and the red candle that sits right next to it. That one here. I mean, that's giving you an indication that there was some buyers there, and there was a really fat candle. And ultimately, that was also the low of that period. And volatility in itself is this really powerful indicator to go on and say, well, I get that the market is fearful at the moment. Do I want to participate? And the thing that generally we find, and you know, we gave it to our quants, and it actually was a 9-month research project that we ran on specifically implied volatility and directionally neutral strategies. We've got this unique data set. We've been collecting data since 2016. You can get it in the back testing, 2015 actually. And we put 55,000 samples of daily data, and we found that generally speaking, implied volatility is extremely accurate in Australia as a future gauge of what's going to happen over the next 15 to 45 day period. And for any of you that sort of understand statistical distribution and what it means is, you know, sort of the thing that you learn in stats is there's a one standard deviation is a 68% chance of something happening. Now in the options world, in the options world, we actually, one standard deviation equals that implied volatility value. So if CBA is 20% implied volatility, that means there is a 68% chance statistically that CBA is going to go up by 20% or go down by 20% over the next year. Right? So it's a very important as a forward indicator from the market, as a leading indicator. When we ran all this stuff from the January 2016 to this is it was actually June 2019 that this data is at. Sorry, I'm just picking up on my own errors. But we found that it was 70.5% true. So there's a 70.5% chance of the price staying within that one implied volatility adjusted from now to the next expiry, as long as that expiry was longer than 15 days. two standard deviations, a 95% chance, in reality it was a 95.3, and the statistical estimate for three standard deviation move, the highest 99.5 was 99% that it stayed within those levels. So when we came up, when those numbers were created, I was honestly gobsmacked as to how accurate traders are predicting volatility. Because anybody who goes out and says that markets are inefficient in Australia or there's not enough liquidity, that is a clear indicator that that's completely wrong.
Yeah.
Or false. Like in reality, our market makers are very sophisticated in Australia. They've always been there, and the price that you're getting filled at is usually a good price. At least maybe through, if you're using our platform. But
too far out of the money.
Well, there's difficulties with all trade. So an iron condor is it's a little bit harder because you've got to understand the concept of exercises and assignments, which doesn't really deal with, but that's stuff that Tim can help with now. There's an entire video specifically how do you deal with that kind of stuff, and why you'd want to know how to deal with that kind of stuff. But the idea is you pick 4 strikes, and so A, B, C, D, and you sell a put and a call at strike B and C, and we're going to talk about this a little bit more so you sort of get an understanding. So as long as the stock stays between that, you don't have to pay anything to close your trade out. You make money on your trade and you get to keep it. That is sort of the premise of an iron condor. So as long as it doesn't move too much, it's good. If volatility drops on a stock, it's good for that position. As time passes, it's an income generation strategy because as every day passes, you get more and more revenue, or you get more and more profit and loss. All that kind of stuff, by the way, that's all coming straight out of the options cookbook. You can click on learn more. If you won't have access to the options game until the end of November, but if you do want to get access to this, impliedvolatility.com.au has everything that you need in there. Chat to Tim on the desk to get a 30-day trial of that platform, which you can continue getting that educational until the next game, or if you're ready to start digesting the trade ideas and stuff like that, again, just speak to him and he can give you and set you up with all of that. And if you want him to give you a buzz, by the way, at any point in time, just type in yes. Also, by the way, just while we're on the topic of posting, probably should have started with that. If you guys have any questions, comments, please type them in as well. We're happy to answer any questions as we go on. Mostly about our amazing platform. But anyway, so with Iron Condor, you're effectively buying a deep out of the money put, you're selling an out of the money put, you're selling an out of the money call, and you're buying a deep out of the money call. And typically this kind of stuff was always difficult to do. People used to have spreadsheets, used to have PhDs in mathematics before they could understand what it is that they're actually doing. But you can go into the options cookbook, you can type in iron, and the strategy that gets created for you is an optimized strategy based on standard deviation, based on implied volatility, based on stats and all of that research that we've been doing. And the legs that get sold are effectively half standard deviation out, which is stuff that we found through our back testing that it's the most efficient based on 3 years of data, and we'll talk a little bit about what that looks like. So with an Iron Condor, your maximum profit is the premium that you receive from the trade. So if you're receiving $1,000 for the trade, that is your maximum profit. And then the maximum loss is it goes completely away from you, and sort of your bought legs that we were looking at before that act as protection end up being no longer, well, that's effectively your cap. That's your stop loss inherent in the option strategy. So a lot of you guys that have been talking about, can I put in stop losses with options? They're created through you building the options legs or picking the strikes in line with what it is that you're trying to achieve. It's all about flexibility. And if anyone's sitting there right now just confused, going, what is this crazy man talking about? Options do have an element, which is, there is a learning element to it. It's a journey. We're all learning as we go on. But I'm probably going to depths that you probably don't really need to understand completely because the platform displays all of this stuff. But I think that usually it's the safest approach. I don't know. I keep just kind of smiling and go, I think I've started to annoy Patrick with my deep talk over the last year and a half.
No. I tuned out there for a second and I tuned back in. It was all on iron condors.
What are you trying to say, man? Anyway, so let's say, for example, that which we're looking, we are going to move on now because clearly that just wants to get to the point, which is how do we make money out of the market? Anyway, so XJO, trading around 6,000 at this point in time, you say, okay, well, I expect that the market's going to stay around 6,000 points. And typical iron condor is you say, okay, well, I don't think it's going to go higher than 61.50 over the next month, let's say 45 days. And I don't think it's going to go lower than 58.50, so 150 points each way. And then just to protect ourselves in case there's something really unexpected from the market, you buy a 6,200 call, for example, and you buy a 5,800 put. So if the market goes to 5,000 over the next month, it doesn't matter. You're capped out at 5,800, or if it goes to 7,000 because, suddenly there's some big invasion of money coming into Australia's way, which suddenly takes it to something that is never seen before at that point in time, you're covered. So there's those inherent stop losses. So anything in that blue range will make you the maximum amount of profit, and then you start getting into sort of break evens around about somewhere between 6150 and 6200, and then so on and so forth. In this case, what would happen is, this is sort of what happened with the market, so it touches that sort of upper end line. We never got out of maximum profit, and the closer we get to that end of the period means that we would get closer to making the majority of our maximum profit. You don't have to close down the position. That's sort of that epitome of that trade of what we're trying to achieve.
And well, this move to the next slide, because that's probably summarises the whole point of why we like iron condors is
that I've been talking about for the last 50 minutes.
Yeah, but statistically, we can put a trade on and the odds are in our favour of it being successful before we actually think about optimising it. Right, and so, directional, what are you, flipping a coin, 50-50, right?
Yeah. Stock, it's less than 50-50 because you've got to pay brokerage, right? Yeah,
it was interesting when we did that analysis late last year, early this year on iron condors, and we had someone working on it for 4 months, quant working on it for 4 months. So one of the stats that came out of it, which you could probably talk to better than I, it's just occurring to me now, is how the difference between statistically whether the market will go up or down, given that overall the market ends up going up most of the time, and we've watched it in a bullish market, statistically the differences day to day are really not that great, whether it goes up or down.
But it's but then once you go to a week or a month, then they start getting skewed, and it's also different about how the markets behave around breakouts or breakdowns. It's.
But what we like about options, and this is just an example, is that I don't know, in this instance, there's a 34% chance either side. What's that take you to 68? And I think that statistically it's slightly better than that.
It is, yeah.
And if you can set a trade up, 74.4. Thank you.
Just 70.4.
And that if you're trading a breakout, or you're expecting you're at a major pivot point, or those types of things, I can remove those scenarios out of my decision making, and then can I improve upon 70.4? And if my payoff is like for like risk to whatever, or in not too bad, you can work backwards from there and go, there's a sort of a good options trading strategy. And one of the reasons we like iron condors is that, if I trade one iron condor and I need to make money on that iron condor, then it's like anything else. But if I can trade across a sample of 10 or 15 or 20,
it's much more likely to get to that.
Yeah.
All the research that we do as well
and directional trading.
We have no consideration for dividends coming out, or support resistance lines, or a technical indicator. Like when we're looking at this stuff purely from a statistical point of view, it's all about, what's going to happen. I mean, is this correct? Is it not correct? And so on. And it's mind-blowing how accurate it is.
And so the project that we did on the quants did on condors sort of blew up a couple of theories that were had. But one of the interesting things that it did for us was it changed the way that we trade iron condors.
Which went for 9 months, not 4 months. But I was going to.
Well, I was only thinking about it for 4 of those 9 months.
Yeah.
But
when the results started coming, where are my results? Where are my results? Thank you.
But the thing about it was that, and I think probably for me the biggest take home was that by actually tightening the strikes, by not going wider, which is the natural reaction that most people have trading iron condors is, well, I'll widen my strikes and I'll increase the chances of making money. But actually, statistically, over time, reducing the net gain, right? And by going tighter, it actually increased the chances that it would finish in outside of your sold legs, and therefore not necessarily max gain territory. But because of the bigger credits you received, net, you're much better off.
Yeah, it is. It was always interesting, and so we sort of, to put that. So that's just the normal distribution thing that we were speaking about before, but just sort of put on the chart. And what we're looking at is that period between where that just sort of that most amount of uncertainty, I guess, in the cone, where there's most amount of time decay. And by the way, for anyone who forgot why I started this, Phil from Victoria traded a lot of iron condors in his trading system, in his trading in the options game, and typically not a strategy that does well in the game because it's not a leverage strategy. It's actual, like, this is how you trade your account type thing.
Yep.
And it's what we trade in our account, which is why I started going on about it.
But last game as well, we had someone do very well with iron condors.
Yep. George.
Second. Yep. So it has, it's done all right.
George W.
Yeah.
I'm good. I remember names.
Yeah.
Not usually good at pairing them with faces, but anyway, keep forgetting your name as well.
Yeah.
But we play in that black zone, and the idea is that so just going back to what you were saying before, is that typically people go on and say, well, there's a 68% chance the market isn't going to go in there. What we found is we actually want to play in that category. So this is where the timing starts coming in, where our research is showing that, okay, well, these are the times when the market is more likely to not do anything to consolidate, and and we launched our service officially, pushing trade recommendations out after that 9 months of research in April this year, and it's been performing better than we expected, to be fair. I mean, well, better than what the stats were showing. So it goes to show that it's that category. We'd rather take a loss more frequently, but we just want to time it much better. So so we are going back into sort of our quant ideas, and so what we did is that service that we're talking about, we put it together in 3 sort of levels, which is gold, which is 80 points plus, silver 75-80, bronze 70 to 75.
Yeah, and if you've been playing the game, you can get the same platform with implied volatility, and it has these trades built into it, right? So you use the same technology to place your trades, you can do everything exactly the same. However, it'll also give you the gold, silver, bronze, widget
when it comes up.
Yeah.
But you do need to get Tim to enable it.
Yeah. So if you want to get access to those trade ideas, or you want to continue to have the platform, we can give you a continued trial of it, and you continue practice trading and we'll put 50 grand in your account, we'll do all that kind of stuff, so you can
or transfer your positions over if
you can take your positions out of the game. Just type yes into the chat box, and we'll get you set up for that trial.
Yeah.
Okay, sorry.
Tim and Blake are not allowed, by the way. Yeah,
standard.
I'm sure you were cheating somewhere. I had a look at, I don't know. Yeah. And thanks, guys, for those of you that are just typing in yes now. So it goes back down to a scale level, and this is sort of what we found. So this is Jan 2019. I'm sorry, I haven't updated the data, but I said it was sort of better than this. But we had 5 trades that came up in that 80% category, or in that 80-point category, as we call it. But it had an 80% win rate. You're saying, okay, well, I've got a 5 grand account. Average win was 1.8 thousand. 9,310 was the total profit and loss on that after fees and charges. Silver, we had 28 trades that came up. 71% were accurate. Total P&L on that 5 grand position compounded was $48,339, and average P&L per trade was 1.7. And then this is I guess the thing that we were looking at, is to see how accurate this is you start seeing that drop off. So the bronze category sort of had 93 trades. You're starting to trade a lot more. Average P&L was 670 per trade, but also because there was just more trades, you ended up making more profit in the end. And thanks again, guys, that are saying yes. But if you take every iron condor trade in the market all the time, and you did 48,737 samples that you did, The win rate on the strikes which we choose and automatically gets built is 54.08%, so you're on the right side. Your total loss is $9.5 million because it's compounded because you're doing 48,000 trades. The average P&L per trade is $196, which is pretty much brokerage and fees. And so that was sort of one of those things that we went, aha, like here's the whole pool of trades and we can filter it down. We can find the right time, and market timing is crucial. And, before anybody goes and thinks that they should go on and put their entire savings in something like this, part of what we're doing is options are a small portion of what we do. I mean, it's an income generation strategy. There is an element there at the moment. Drew, love your comment. Still waiting for the light bulb moment. Very impressed with your platform. Bulb is in the socket. Just needs one more twist. Hopefully in the next 150 slides that I've got to go, I will make that twist.
Oh no.
Oh no, it's one of those. We gave Ivan the ability to build his own slide deck. Here we are. But anyway, but so it's crazy how much you can all go and optimize this stuff, and it sits there. It's an asset that sits as an instrument to the side of the rest of your portfolio. Sort of P&L graphs based on that past performance. Again, based up until sort of January 2019. So just taking the silver trades gives you relative, I mean, it's flat lining, but in reality, there's sort of periods which significantly outperform. Otherwise, it's sort of sitting flat with the market. The bronze adds in the overall P&L. It's a more consistent, so you're doing bronze, silver, gold, and you sort of look at the difference between 10, 20, 40 and 100, and the reason why there's sort of that much bigger growth in that, so for example, $100,000 account as opposed to a $10,000 account, because your percentage of brokerage as part of your overall trading becomes a lot smaller. I mean, you go down to sort of 0.24 and you're still paying around about that $25 a leg, and fees don't get that much bigger, so you end up having a lot more performance. So it's important to know sort of that correlation. I apologize. It's been a very long week, but since we launched that service, we suggested you trade at 10:30, which sort of when most people trade. We've had a couple of others come out which were good. We had an AGL that didn't go well. That was part of that list after that June period. But we had another 3 or 4 trades and they were good. Like max profit territory, maybe 5 from memory. No, there was aside from AGL, I think every other one was a winner. We had a fair few that came up actually, but you'll see sort of NAB was half max profit, WPL was 3/4 max profit, CTX we were just caught in a really bad time, but all the rest were profitable in terms of maximum profit. So that's sort of an indication of what's been happening. Paul, how much was the risk per trade in the 100K account? We were steering pretty small, so it was looking at $2,500 per risk to $5,000 worth of risk, and there was a table which I think I have in here. If I don't, I believe you've been on a webcast where we showed it. But anyway, but that was from memory. That was a $2,500 risk per trade compared on everything. You just take a lot more trades on. So in our system, that's sort of the dashboard that looks like what happens. The trade ideas pop up on the bottom, and you get a trade idea thing, and then you say, okay, well, you can go cycle through these ideas. It shows you the confidence levels from 92 points, sort of that goal trading, so it's roughly 90% chance of profitability based on our trading system. It will go on and show you the maximum risk reward, so you can go on and slide it. So you say, I want to risk $1,000, you just slide it across, for example. It'll show you where you can go on and change the strikes, by the way, if you're unhappy with them, but you can go on and say, okay, for BHP, current price is $26. I expect it's not going to go below 24 or higher than 28. And as long as it stays in that, I'm not going to lose money. and if it says between 25 and 27, I'm going to make the maximum amount of profits of $240 for every sort of 520 that we want to risk. And you look at sort of the outsides, and then ultimately you can just go and place that trade. So it's a real easy way of going and trading that combo. I mean, to be fair, how many other platforms online can trade combos through the platform? Yeah. Now, there's sort of a section here on lit. Do you want to talk through it? Because, you know, I think that I feel like me talking is going to put people to sleep.
Yeah. Look, I think I'll go through this very quickly, but you know, the two styles of trading that we've tested so far have been both based on hypotheses that we have started off with, and we've gone through the quant process, and then we've changed our mind about a bunch of stuff on the way through and reviewed and done the things that you should do if you're trying to understand what works. There's two styles. One is we think that the share price isn't going to go anywhere, and the other is we've got a high degree of confidence that a significant move is going to happen, and a pretty good degree of confidence we can pick that direction.
Yeah.
Right.
or well, we can pick the significant move.
We're better at picking something happening, the pivot point, than we are the direction. Yeah. But knowing that it's a pivot point allows us to set a trade up which we can react to the move going against us. So I guess that's the point. So leading, what is it?
Leading indicator trend trading system.
Thanks, God. It's killing lit for too long.
Lit up, man.
Yeah.
You've seen Suits, right?
Anyway, so here's some stats over the top. 87%, 83%, I should say, of the trades were profitable. Average profitable was $1,335. Generally, we were trading with 1 to 2K. And the biggest profit was $16,000, which was a WPL trade that went appallingly badly. Well, when we say badly, it went very, very well, but went in completely the opposite direction of where we originally set the trade up.
And it was a big move in October.
Yeah, big move. So,
but the breakup. And,
anyway. It was a fake out. Anyway.
It was a fake out. It went from the 52-week high.
So you know, as a trader, if you only trade bullish positions, then you have to find trades in all market conditions. So the market's falling, but the only trade you know is how to pull bullish moves, then you're going to find bullish trades, right? Yeah. Or you're not going to trade at all. But if you're a trader, you'll find trades, right? And the old saying is, if the only tool you've got is a hammer, everything starts to look like a nail. Definitely applies with trading.
Oh,
so
no, it's a quote.
We profit in any market is, well, it's probably an easier way of saying this is we observe the information in front of us and act accordingly. And so if that information is telling us it's going sideways, up or down, then we do something about it. If there's not enough information to arrive at a decision, we do absolutely nothing. But generally speaking, throughout the periods of time we've been trading and also prior back testing, there are pretty much every month every month there has been trades, right? Excuse me, sorry. Anyway, so there's some of the things that are important to success, but I guess the background for us is, yes, it's having a hypothesis for trading, but it's actually being able to test it mathematically and know that you can prove that what you're doing is actually giving you an edge. It's just not in your imagination. So pick direction, pick entry, monitor position, and follow a checklist is sort of the flow for a trading system that we would use. So we start off by having a view, then it's establishing where to get in and what strategy we'll use to trade that, monitoring, and then trying to keep as methodical as possible. So once we're in the trade, as much as we can, we don't want to have an emotive opinion about things. We want to have a preordained set of, if this happens, we do that, or depending on what happens, we've got a move to make. All right. Trading without a system is like starting a business without a business plan. And if you think that you're a really good cook and you're going to open a restaurant and that restaurant's going to be really successful, you might be the best cook on the planet, but if you put that restaurant on the wrong street, if you don't manage your stock, if you don't hire well, there's a whole bunch of things that you need to consider. For traders, quite often people will think, well, I've got to be good at picking direction. That might be the only thing they're thinking about, or it might be where they spend 90% of their time, or they might be thinking, I need strategies. But for a lot of people, they don't consider all the things they need to consider and get the mix right. And that's one of the reasons why we like to give you trading systems and build them into our platform so that you can go, okay, well, I understand the process behind how this decision's been arrived at. I know what strategy I'm going to use. I know how I'm going to react if the market goes up or goes against me or does something. I know what to do next, right? Everything's being considered. It's a business plan, and you should run it like a business. All right, so trading mechanically, reducing emotion, and being risk-focused, these are some of the key things that a trading system will give you. And I guess in terms of, if you don't know that what you're actually doing works, right? You've just got a feeling. On what sample do you arrive at that, on that, what sample do you use to arrive at a conclusion? Like if you do something 10 times and every single 10 times it works, does that mean that on the 11th time and the 12th and the 13th time it's going to work? Or over a sample of 100, you're going to get the same results, or even a result that you can make money out of? So having something that we look at lots of different data points, it gives you that confidence that you've got an edge. And it's really important because at the times that you need to lean on that edge are the times where things actually aren't going in your direction, and you are starting to question, the basis for how you've arrived at decisions. Now,
and like this is the funny thing, isn't like how this whole thing ultimately evolved is. So I became a depth trader one day. Like a prop trader. I got given funds from that's how I ultimately ended up in Sydney initially. The thing that they said to me, I came up with this kind of like special child with 50,000 different million indicators, and I read mathematically about all of them, and they went, "What's wrong with you? Like, what does that mean?" And I'm like, look at this, and then it's got this, and and they're like, "Okay, draw a straight line. There's support, there's resistance. That is the most amount you will ever look at. Everything else, just look at the price, man. Like, that's all you need to know. Everything else doesn't matter. Implied volatility, it's a real thing. It's a deviation of price. It comes from the option prices. That makes sense." So when we're going up and looking at this kind of stuff, we say nothing makes any difference. And 99% of the trading indicators that we look at are all immediately dysfunctional through quantitative backtesting.
Yeah.
It's some guy sitting in a room, like the guy who created most of the technical indicators was a poor guy.
Did like jump out of a window at some point?
No. That was Jesse Livermore. That's a different guy. No, but the guy who invented RSI, who invented parabolic SAR, ADX, which is actually the only one that is of any kind of value, really. Like you look at all these things, and he came up with those because he needed to ensure that he doesn't die. Like literally, he was starving. So he wrote a book.
So when you're thinking about your own trading plan, we would recommend that you think in this way, and you'll hear us anytime anyone invites us to go and talk at the event. or
they seem to be dropping lately.
We keep going on and on about this because all of the stuff that you want to talk about, at the end of the day, it all comes down to can you do it? Can you execute it? So establish a hypothesis, test it, and then define your rules, and then optimize your rules. Right?
Trading's boring and systematic.
It's
a job.
And ultimately, if we think about when we've traded really successfully and when we've lost, it generally becomes that you're trading really, really well, and you get a little bit high in your own supply, and then you start breaking rules, right?
All right, Tony Montana.
Or you're on the flip side of it, you lose your confidence. All right. So anyway, let's where do we go from here? All right. So a lit long strategy. Look, we've gone through this, and we're going to run sessions on it. I think what we might do is, because given we're heading to 8 o'clock,
and I've just been speaking about stuff. And actually, there's actually no point going on because that is stuff that I haven't had time to update. It was the previous options game stuff.
So I think we've come to the end of this game. From our perspective, we really probably
huge.
We had a record attendees by a significant number. people playing the game. There was over 1,700 people logged into the game, which is a huge number. It continues to grow. We see a lot of people coming back and playing the game again. Yeah. We've noticed amongst our team here that people that played the first couple of times didn't do too much with it, and then as they've kept playing and honing their skills and their ability to pick direction, they're getting better and better and better, and they're coming. Tim started off pretty well.
He did well in the last game as well, which
just a natural. Yeah,
I mean, it's one day you will earn enough money and you will run away from us running a massive options book at some kind of a multi-billion-dollar hedge fund.
Yeah, truth. He's happy with that.
Yeah, raising funds now.
Yeah.
Phone will be open tomorrow morning. We'll see to contribute.
But if you would like to get access to our technology, if you want the support, if you want to come along to our trade groups, if you'd like access to our trade ideas and trade scanners, all the options tools that you've possibly been using during the game, all you need to do is type yes, and we'll continue to give you access to it and give you a trial so you can go and look at it more. If you want to start trading with us, our brokerage rates are the cheapest options pricing in the market, and we're the only place where you can do combination orders, so you don't have to call them through over the phone and pay expensive prices for it. We've set this up, as Ivan said, for both of us. The whole trading part of our business to date has been quite a small part of both of our businesses, but it's something that we are both hugely passionate about, and
we're continuing to invest.
Yeah, and it's growing out. So we've got a whole bunch of exciting announcements to make over the coming weeks and months. Our business is growing a lot, and there's some big things happening. So we'll be looking forward to updating everyone on this.
And JVs that they're going to be fantastic. Well, it's expected to be fantastic for you guys ultimately.
Yeah, it's going to allow us to provide more services.
Really long webcasts where Ivan gets to talk.
Yeah.
What did you learn today, Patrick? Never give the ability for Ivan to write slides again.
No, it was good. So I hope you guys have enjoyed the session. I hope you've enjoyed playing the game. Thank you to everyone who came along to all the different education and trade groups and everything we ran throughout it.
Well, you were falling asleep. Yep. Thank you, Drew, for saying this is the best webinar you've ever been. So thank you.
Good.
Thank you. And also, Drew, thank you very much for liking all the Vimeo videos that you've been watching on the 10x10 webcast. They keep coming through at weird times where even my wife looks at me and goes, "That's a bit weird, dude. Like, what's Drew doing with your videos?" So I just wanted to let you know. She's probably listening, she will.
Excellent. All right, guys. So what we'll do is we will call the session to a halt tonight. If you need anything else from us, contact us. If you haven't requested a trial, type in yes. We'll get you set up for that. If you want to start trading with us, type in yes.
No
we'll
obligations for any of that.
But
for the trade ideas, hopefully we're getting into that period where it's starting to, it's like we're out of that lull, hopefully.
Yeah.
And hopefully we start having more of those coming up. And to be fair, if not, then it's probably for the best for anyone who. It was funny actually. I don't know how we went in the trading session today, during the day, but I don't remember if it was last week. People started getting that itchy finger going. I just want to trade. What do I do? Here's a couple of ideas, but like they're against trading systems. I'm putting them in my account.
Yeah.
But eventually there's going to be a time, and it happens every couple of months to 6 to 12 months. There's like 12 trade ideas that come out.
Yeah.
And those are ones that 10, 11 of those, like that, those are the big money makers.
Yeah.
And then it gets quiet again.
Yeah. But there's been some good trades there. There's definitely some very good trades there.
What do you say? We're sifters, not alchemists.
Yeah.
So anyway.
All right.
Been a long day.
It has. All right. Thanks, guys.
We
will see you back online again shortly, hopefully. Cheers.
If we don't die.